Chapter 20 is a session that everybody's been waiting for, real estate math. And the question might be, are you smarter than a fifth grader? Because most of this math is basically a fifth grade or less level. Also, let me say this. Math only represents 10% of your total examination. So let's don't let math beat us up. You're going to get 5 math questions right whether you like it or not. So let's don't major on the minors. So what I want to do right now is I want to go through the math that I think is going to be important for you, talk about it a little bit, but let's don't let this part beat us up too much. To begin with, obviously you're going to have to know how to deal with and calculate common area problems. Base times the height is going to be something that you're going to have to know. Also knowing that 43,560 square feet are in an acre. You've got to know that. There's 640 acres in a section. You'll have to know that. Regarding the appraising section, the comparable sales approach or the competitive market analysis, you're going to have one of those one way or the other. I think it's important to know, and a good way to remember the comparable sales approach, you're going to be gathering comparables. Those are properties that are similar to the subject property. You're going to be subtracting away any of the differences that we may have. An easy way to remember the differences: Robin Hood, take from the rich, give to the poor. You only adjust the comparable. If the comparable is a better property, you want to adjust it down and make it like your subject. If the comparable is an inferior property, you want to adjust it up and make it like your subject. You never adjust the subject property. You only adjust the comparable. Remember Robin Hood, take from the rich, give to the poor. That's your comparable sales approach. As far as the cost depreciation approach is concerned, the cost depreciation approach is where we're going to separate the building from the land, and we're going to take reproduction cost of the building. Once we've decided and determined what the reproduction cost of the building is, we're going to subtract away for all of the accrued depreciation. Accrued depreciation is physical deterioration, functional obsolescence, and external obsolescence. We're going to subtract all of those out, and that will leave us the depreciated value of the building. Sometimes what we use is the age-life principle, and that is that every property has a useful life, and it also has an effective age. The useful life is how old it should last without any repairs. The effective age says, how old does this building look to me? The effective age represents that amount that has depreciated. So if a building has a useful life of 40 years and it has an effective age of 10 years, that means 10 years out of 40 is depreciated and gone. That means we have 30 years out of 40 remaining of value. Once you've determined the reproduction cost or the depreciated value of the building, the next thing we have to do is add back in the land value. And that gives us our cost depreciation approach. There are 2 approaches to value that we look at when we're trying to evaluate income. The first is the income capitalization approach. Remember, the income capitalization approach is where we're taking our net operating income and dividing by some capitalization rate. Remember how we got the net operating income? We took our potential gross income minus our vacancy and collection losses, which gave us effective gross income, minus our operating expenses, which gave us net income. It's that net operating income that we divide by that cap rate that gives us value. Remember the formula IRV, I over RV. As long as you know 2 of those items, you can always find a third. When numbers are on top of each other, you divide the top number by the bottom. When numbers are next to each other, you simply multiply. That's the income capitalization approach. The other approach to value based on income is the gross rent multiplier. That's our VROOM formula. V over RM. Value, rent, multiplier. Again, if you know 2, you can find the third. So if I know what my multiplier is and I know what my monthly gross rent is, I can find what the value is. Regarding investment, you're probably going to have something on the state examination. and on my examination on the profit percent. That's your made over paid problem. Remember, what you made is your net profit divided by what you actually paid for the property. Regarding real estate taxes, you're probably going to have a real estate tax problem on there. Remember, you're going to take your assessed value minus any exemptions will give you your taxable value. And you're going to take that taxable value and multiply it times the millage rate. And the way that you calculate your millage rate, you're going to take your city, county, and school and add them up. Now let me caution you from a test standpoint. If you see a problem where a person lives out in the county with those three taxes, city, school, county, you're only going to pay taxes on school and county. If they tell you they're in the county only, if they don't tell you or they say they live in the city, then you've got all three. That's kind of a trick question, but I want to make you aware that if they say that this person lives in the county, don't worry about the city taxes at all. And remember that a mill is 1/1000th. As far as the exemptions are concerned, remember this. The first $25,000 of value is fully exempt. If the property is assessed for $50,000 or more, you get an additional $25,000, but what is not exempt is your school taxes. The school district are not exempt in your second $25,000. Also, let me make you aware of the special assessment problem. The special assessment is a government tax that comes out based on government improvements of a neighborhood. What basically happens is the city or county comes out and either paves a street, puts in sidewalks, puts in lighting, whatever it might be, where abutting property owners will have a benefit from it. It'll improve the values of the property. The way that this is calculated is you take the front feet, the front number, the first number in all the calculations, 125 by 300. That first number is always the road front. You're only concerned about the road front. You're going to take the road front times whatever it costs to pay out that bill. If the government's going to pay a certain percent, that means the property owners that are abutting are going to pay another percent. So make sure you sift that out. Once you calculate that, here's what is important for you to remember. This is critical. That in better than 50% of the cases, somebody lives across the street that's going to share that bill with you. And that's the way the state sees it from a testing standpoint. Therefore, you're going to take whatever that bill is in front of your house, that's your portion or that percentage portion, and divide it by 2, because somebody's going to share that with you regardless. You can argue if you want. That's how they test it. As far as mortgage and discount points, remember that for every point that a lender charges, it increases their yield by 1/8%. 2 points are 2/8, which is a quarter. Also remember that when you're calculating points, that every point that they charge, it equals 1% of the loan amount, not the purchase price. It's the loan amount. Regarding the mortgage amortization, there's a good chance that you're going to see a mortgage amortization problem. Just remember that you're going to take the loan amount times the annual interest rate, and then you're going to divide that annual interest rate by 12 because your mortgage payment is made monthly. Then you're going to take your mortgage payment, which is principal and interest, subtract away the interest portion only, and that'll tell you how much principal you paid down that month. You'll take that amount that you paid down, subtract it from your principal balance, and that'll give you a new loan amount, a new principal balance. Then you're going to take the same step and do it again and again and again. So it's the same step over and over and over. Regarding your closing and closing cost, I think it's going to be important that you know how to do commissions, obviously. And so you need to focus on your commission problems. Also, let me make a comment about net listings. An easy calculation on net listings, if the seller wants to net $100,000 and the broker wants to earn a 10% commission on top of that, the easiest way to calculate it is if the broker wants 10%, that means that the seller is getting 90% of a larger number. You simply take the $100,000 that he wants to net and divide it by 0.90, and that'll give you a larger number. It's not $110,000. It's $111,111.11. And then when you back it in, you'll see that those numbers work. Regarding doc stamps and intangible tax, remember that you're going to have a documentary stamp on the deed, which is based on the purchase price. It's 70 cents for every unit of $100, and any fraction you have to round up. The mortgage is an intangible. There's going to be an intangible tax, 2 mils, 0.002 times all new mortgages. The promissory note, or the doc stamp on the note, is based on all new notes created at closing. That's both new debt and assumed debt. So anytime you have an assumption, you'll have a promissory note created, but you will not have a mortgage created. So there's only a documentary stamp on that assumed debt that you're creating. Remember that the doc stamp on the promissory notes, that's going to be 35 cents for every unit of $100. Any fractions of 100, once again, you're going to have to round up. Those are your doc stamps and intangible tax. Also remember prorations. Do your timeline, seller, buyer, and a closing date. If that bill was paid up front, look for the back of the timeline. If that bill was paid or due at the end, look at the front of that timeline. Remember that in a proration, it's one amount of money that one person owes to the other, and that's all that it is. And that is the end of your mathematics session. Again, you're only going to have 10 problems. Let's don't make this more than it really is. So let me review with you real quick about what that information is that you're going to need. To begin with, the loan amortization, you're going to have to know how to do a loan amortization. Secondly, you're going to have to know how to calculate commissions. You're going to have to do a proration. Probably the two prorations that you're going to have to do are tax prorations and rent prorations. And let me caution you, taxes are an annual proration, rents are a monthly proration. You're also going to have to do doc stamps on the deed, doc stamps on the note, and intangible tax. You're going to have to know how to calculate your housing expense ratio for FHA and conventional. You're going to have to determine the cost per acre and the cost per front foot. You've got a legal description that you're going to have to be able to calculate. Remember, when you're calculating a legal description, if they give you the northeast 1/4 or the southwest 1/4, all you're going to do is take 640, the number of acres in a section, and simply divide it by the bottom numbers. Now, I want you to be cautious of the word "and." The word "and" means that you've got two different legal descriptions. So what we need to do is separate them. And you'll simply divide by the bottom numbers on the first, set it aside, bottom numbers on the next, or whatever it might be, and then later come back in and add them together. This concludes Real Estate Career Quest workshop for sales pre-license. A couple of items that I need to talk to you about to make sure we have done. Make sure that you view every page of the internet. If you fail to touch every page of the internet course, the icon for your final examination will not pop up. That's got to be done. Also, I want to encourage you to listen to the audio again. Pay particular attention to the summary audio. Also, there are 6 practice examinations that I'd like for you to take. It's not required for the end of course, but it's great study, and it'll grade it for you. Let me leave you with a couple of words of advice. Remember that two things can't exist in the same space at the same time. Negative thoughts and positive thoughts can't coexist. You really have to believe that you can pass the final examination if you intend to. So let me suggest to all of you, have a positive mental attitude, and let's go pass that final exam. Have a great day.